We've got lots going on there. And then crypto, which is actually part of the same thesis, has been on fire as we've got, the ETF flows driving things. But really what that is all about is adoption. So we've got new technology adoption, which has been growing in a secular trend. And then it gets exponential every time you add the business cycle to it. So I'm really, really hyper-focused on that.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about crypto market. According to Raoul Pal, the optimal phase of the business cycle is when, as growth picks up, inflation stays low and begins to supercharge. Secular themes like technology and crypto both benefit from debasement because there is an increase in liquidity in the currency market. Along with a noticeable rise in the number of participants, technology is rapidly evolving, with AI leading the way in terms of adoption effects. There's a lot happening, with robots advancing quickly. We have plenty to keep up with. What's happening there? And then crypto, which is actually part of the same thesis, has been performing exceptionally well lately. ETF flows are a key driver, but ultimately, it all comes down to adoption. We have seen a steady increase in the adoption of new technology, which has been following a consistent trend. Every time the business cycle is added, it grows exponentially. So Raoul Pal very focused on that aspect also to connect with something Angus has explored. He have analyzed market versus debasement by dividing things based on the Fed balance sheet and lots of things Raoul Pal discuss, so please watch the video to end. And share this video and subscribe our channel, Everyday Finance. Thanks.
I'm still super focused on the time horizon of right now is where I think the business cycle sweet spot lies, which is growth recovers, inflation remains low, and it starts supercharging my secular themes, which are technology.
Crypto.
Both benefit from debasement of currency, the added liquidity. But in addition, there is this exponential age of technology that's playing out, and the adoption effects of that, of which probably AI is the fastest, but it may not be. Who knows what else is coming? There's a lot coming. The robots are coming fast as well. We've got lots going on there. And then crypto, which is actually part of the same thesis, has been on fire as we've got, the ETF flows driving things. But really what that is all about is adoption. So we've got new technology adoption, which has been growing in a secular trend. And then it gets exponential every time you add the business cycle to it. So I'm really, really hyper-focused on that. If I look at, and just to tie in something Angus has looked at as well, I've gone through kind of every market versus debasement, this dividing things by the Fed balance sheet. I think Jordi and Angus, I've shown you this before. You divide it by the Fed balance sheet. There's only one emerging market that actually comes out to be growing, which is, again, on the same basis of debt demographics and deflation as India. So you've got, a very limited emerging market set that's really working and a very limited set. But those three markets alone are giving you enormous returns. So I'm super focused on that. People don't value businesses correctly anymore. And Jordi's right that, let's say, the business cycle is structurally shifted. That sounds like it's going to be an extremely positive backdrop for markets that most people don't understand. Last year was a typical market where nobody understood what had happened. But really what you're talking about here is kind of a change in how people approach markets and economies, and people haven't got to that understanding yet. So maybe that's one of the reasons the markets were so ludicrously strong last year. You just need the Fed to take its foot off the neck of the market, and before you know it, this kind of beach ball shoots out from underwater because things have changed.
According to Raoul Pal, businesses are not being valued accurately nowadays. The structure is shifted in a way that suggests a very positive outcome. Last year's market was a backdrop that most people found difficult to comprehend, as it was a typical scenario where nobody understood what was happening. What occurred is essentially a shift in the topic at hand. How individuals perceive markets and economies is still not fully understood by many, which could be a contributing factor. Last year, the markets were incredibly strong due to the influence of the Fed, off the market's radar. And suddenly, a beach ball emerges from underwater. Due to the shifting circumstances, we came of age in a world where companies were funded by debt. General Electric and other similar companies operate in the realm of debt financing and interest rate management. Essentially, the leadership of the S&P 500 has never incurred any debt in their lives, or if they have, it's minimal for the purpose of managing cash flow, and everything is now focused on equity. So if you consider it, if you are familiar with the VC business that used to be your local bank, you would have to plead and establish a new one. In the business world, what we refer to as a startup actually signifies that equity-funded ventures may be less affected by the business cycle. Let's back to the Raoul Pal interview.
More business cycles.
And I wrote about this in GMI, this exact thing, having not seen that chart, but I just thinking through is like, and again, it was a conversation Jordi and I had, Angus, that is interesting to you, I think, as well, is that we grew up in a world where businesses were financed by debt. The General Electrics of this world and all of these, they were debt financed businesses, and interest matters. Basically, the entire leadership of the S&P 500 has never had a single debt in its life. Or if it does, it's just for cash flow management purposes. And they're all equity driven. Everything is equity driven now. If you think of, all of the VC business, that used to be your local bank. You'd have to beg and say, I'm setting up a new business. Now we call it a startup, and a startup actually means equity funded thing. And therefore, maybe the business cycle matters less. Angus, what are you seeing? Because a lot of the tech companies, stuff like that, there is a difference between people who borrow money and people who don't. I mean, in your world, Ambani was a great example. He switched from one to the other very fast.
Right.
One of the things I've also been trying to get my head around is I also think businesses will rise and fall much faster. Like, I was using recently Otter AI to do, when you're on a Zoom call, it transcribes it, gives you some notes. Zoom, we started using the Zoom one, it's like 10x better. That's the end of Otter. And we're seeing this happen at a scale because people are now using AI to build the AI, to build the business, to build the AI. And it's like hyper fast. I'm worried that venture capital will never be able to capture money in this environment. Sure, in some areas, of course, but in some of the really fast-moving areas, we've seen it in blockchain. It's been really hard. An ICO market seems to be more effective because it can trade for 6 months and be worth a lot or nothing, and it's okay. But I'm not sure the VC survives this. Do the hardware?
It's almost
I'm
like
reading a random book that both of you probably enjoy, and you wouldn't think you would, is Yanis Varoufakis, the kind of Marxist intellectual economist.
Greece.
He's got a book called Techno-Feudalism, and it's bloody interesting because his view is these platforms like Amazon, Twitter, Apple, all of these, they are now a feudal-based system. They're not capitalist because it's all rent-taking. So you're a rent-taker at the middle of the system, and if you want to operate in that world, the feudal landlord takes his fees. And I think it's the same in tech hardware. That's where it's going, is like, there's literally the barriers to entry are so high, it's almost impossible, of which Taiwan as a country has a barrier to entry so high, it's almost impossible to deal with, that they become feudal landlords of the hardware. It becomes very interesting, and maybe the serfs in the bazaar trading things are all of the software companies in the end, when it used to be a software-owned world. There's something shifting here, and I don't know what it is within that. And Jordan, I don't know what you think about this, but it feels that AI has zero moat in a world where it's kind of like a perfect competition marketplace where you're restricted by the hardware. And they all tell you that. The hardwares are constrained, and everybody's just going to build model after model after model, cheaper, faster. And AI is going to be the water of society. It's going to be everywhere, and it's going to be virtually free, I'm guessing. Mm-hmm. I don't even know what the hell that means.
Raoul Pal believes that businesses will increase in value. He fell much faster, as if he had recently started using Otter AI. When you're on a Zoom call, the tool transcribes the conversation and provides notes. We began to Zoom. When using the Zoom feature, the experience is significantly improved, making it much more enjoyable. This phenomenon occurs on a large scale, as individuals are utilizing AI to develop AI for their businesses, creating a cycle. It's incredibly rapid. Raoul Pal expressed concern that venture capital may struggle to attract funds in this scenario. Indeed, the environment is a concern in certain areas, but in rapidly advancing fields like blockchain, it has been noticeable. It has been quite challenging. An ICO market appears to be more effective as it allows trading for 6 months and potentially increases in value. There's a lot going on, but Raoul Pal is uncertain about the survival of the venture capital industry. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.